Hello and welcome to another video. Today we'll be looking at how you can trade Volatility 75 1S index. Volatility 75 1S index. Volatility 75 1S index is different from Volatility 75 index. Okay, V75 1S is different from V75. V75 moves more rapidly. The price moves more rapidly than V75 1S. Now, V75 requires an higher amount of funds for you to trade it than V75 1S. V75 1S does not really need much money, trading capital, for you to trade it. Okay, so I'm going to show you how you can use ultra evasive Grail Hedge strategy to trade V75 1S using a $50 account. Okay, now the minimum lot size is 0.005. So I'm going to place buy and sell trade of 0.005, which is the minimum lot size for V75 1S. I'm going to place it at the 88 mark. Okay, that's my sell trade and this is my buy trade. Okay, place the trade concurrently at the same time at the 88 mark. So it's placed around the 11888 mark. If I'm going to set pending orders, I could set buy stop at 11988 or 12088 or 12188 or 12288, or I could set sell stop at 11788, 11688, 11588, but it should be at the 88 mark. So we are using the ultra evasive Grail Hedge strategy. Ultra evasive Grail Hedge strategy involves you setting the same lot size, buy and sell at the same time, at the same point. Okay, could be pending orders, it could be instant execution. What I've just done is instant trade execution for the purpose of this video. Okay, now as soon as you have set the buy and the sell orders and they are running just like we have here, what you do next is to set sell stop, buy stop around these orders. Okay, now your sell stop, buy stops are going to be your hedge trades. Okay, and the lot size will be 3 times the original lot size of your running trades. Okay, the original lot size of your V75 1S running trade is 0.005, right? Times 3, that will be 0.015. So I'm going to set buy stop, sell stop, off, edge spacing 1 to 5 points, 125 points. Okay, so for the buy trade, is my buy trade, I'm going to set a sell stop of 0.015 at 125 points. Okay, below this current buy trade. The current buy trade is at 119.00.13. So 125 point, if I'm going to calculate it, I have an Excel sheet where I do the subtraction and the deduction. So I have 119. Okay, I have 119. Okay, 00.13. Okay, so 125 point will be 11775.13. So that's placing a sell stop, at 11775.13. Okay, that's my insurance against this. Okay, let me use. Okay, this is where my trades are. My trades are here. Now just place the sell stop around here to ensure my trade against the running buy trade. This running buy trade for this sell stop. The running buy trade is 0.005. The sell stop lot size is 0.015. That's 3 times the lot size of this buy trade. So I'm going to do the same for I'm going to set the same insurance for my sell trade, my running sell trade. So on my Excel sheet, I'm going to calculate 125 points as my edge spacing. So I have the 11905.19. That's my price level for the sell trade. And the buy stop for my sell trade will be at 125 points above the sell trade buy stop, and the lot size will be 3 times, which is 0.015. The buy stop price level will be 12030.1. I just add 125 points to your trade price, and then you get the hedge spacing. So the hedge spacing for my buy trade is 12030.19. Okay, I'm going to place this buy stop. Okay, so I have got insurance for both the running sell trade and buy trade. Okay, now what I'm going to do now is, okay, before I do what I'm going to do, let me just illustrate this, the buy stop. Okay, the buy stop is to cover for the sell trade, while the sell stop is to cover for the buy trade. Okay, so what I'm going to do now is to take profit for both the sell trade and the buy trade. So my take profit, okay, is going to be about 60 points. My take profit is going to be about 60 points. So calculating 60 points below the sell stop. Okay, calculating 60 points below the sell stop. I will have 118.45.19. Okay, that's the take profit for the sell stop. Then I'm also going to calculate take profit for the buy. That's the take profit for the sell trade. I'm going to calculate take profit for the buy trade, adding 60 points to 11900.13. That will give me 11960.13, just 60 points. Okay, we are treating this trade with ultra evasive Grail Hedge strategy. Now what happens is I have let me change the color for this to another color. Okay, let me put it as blue. Okay, I have the take profit for my buy trade to be here. Okay, then I have the second take profit for my sell trade to be here. So it's either this take profit gets triggered first or this gets triggered first. So whichever gets triggered first, I'm going to delete one of the pending orders and then start the Grail Hedge strategy proper. So for me to start the Grail Hedge strategy proper, I'll have sell stop. I'll have stop loss for the untriggered trade. I expect one of these two trades to get triggered. So I expect to take profit of one of these two trades to get triggered. Now, if this sell trade that is in profit, if the take profit gets triggered and it closes out, then I have this buy trade running in drawdown. Of course, my sell stop will react to this buy trade. Then I have to delete this buy stop, because this buy stop is expected to react. This buy stop is expected to react to this sell trade, but the sell trade has closed out in profit. So that's the way it works for the ultra evasive Grail Hedge strategy. Of course, for V75 1S, the take profit, the original trade take profit is supposed to be 80 points. Okay, once the Grail Hedge starts, I'm going to set 80 points to the untriggered. I'm going to set 80 points as the take profit for my untriggered running trade. Okay, and I'm also going to set 80 points as the take profit for my pending order. Of course, the stop loss will be 210 points. Stop loss for the untriggered trade will be 210 points, and stop loss for the pending order will also be 210 points. Okay, now we assume this gets closed out in take profit, leaving us with this, and then we are with this and we delete this. Okay, so if I set my take profit, okay, to be 80 point, originally it is 60 point for the ultra evasive part. Okay, I expect one of the two to get closed out. Then I'll now review the 60 point of the untriggered to 80 points. Okay, then the stop loss will be 210 points. Of course, don't forget the edge spacing for these two is originally 125 points. So all I need to do is delete one that is not responding, that is, we do not be responding to any trade. I'll delete one of the pending orders. Then the second pending order set 80 points as the take profit, 200 points as the stop loss. Of course, this will be my first pending order. Okay, the second pending order, in case this first pending order gets triggered when we are in the range, with the lot size will be 0.04. Okay, then the third pending order will be 0.12. Okay, so the first trade will always be 0.005 for the lowest lot size on V75 1s. Okay, now when range continues, okay, for the Grail Hedge strategy, the first edge trade, which will be a pending order, the lot size will be 0.015. If the range continues, the second pending order, which is the second edge trade, will be 0.04. If the range continues, the third and the final edge trade will be 0.12. Of course, before you get to the second and the third edge trade, you will have known which direction price is likely to continue. If it's going to continue downwards, if it's going to continue upwards. Of course, if it's going to continue upwards at the second or the third edge trade, you'll know if you have to place the second edge trade or if you have to place the third edge trade. Like we have on the chart, this is a 1 hour chart. Okay, I can see more like head and shoulder, but the neckline is not broken yet. The neckline is yet to be broken. So eventual price continue to go down. And the price continues to go down and breaks the neckline. There is no need for me to hedge to place the edge at the top, which is the buy stop hedge. There won't be need for me to place the buy stop hedge. I'll focus on the sell stop hedge. Okay, so that's what I mean by when the range continues, you should know if you should place more edge trades against the direction of price or not. So the decision is yours. When using the Grail Hedge strategy, you don't just have to hedge up to the third edge trade. You can easily judge which direction price will go, but the maximum edge trade should be the third edge trade because of your equity. Remember, what we are using right now is a $50 account with the lowest lot size, which is 0.005. The maximum equity the maximum lot size that this equity can carry is 0.12. Anything above that may blow the account. So as it is for V75, so is it for V75 1s So is it for XAUUSD, so is it for Euro USD when using Grail Hedge strategy. It's just that the settings, the edge spacing, the take profit point, and the pips, number of pips for the stop loss differs from one instrument or asset to another. So this trade is still going on. I have running buy trade. I have running sell trade. My buy trade is in profit. My sell trade is in loss, the drawdown. But for my account, I can still see I have $0.02. That means I'm still in profit, even if I decide to close these running trades. At the same time, I may still end up with $0.02. That's like 2 cents. Okay. So, but the beauty of V751S is that it is very slow. Price moves very slowly. Okay, but for V75, price moves fast, and the rate at which the lot size, the rate at which you trade is also more risk. V751S is of low risk because price moves and the lot size is very small compared to V75 that has higher lot size, that carries more margin. The margin is higher for V75 than for V75 1S. So this trade is still going on. Currently, I'm using ultra evasive Grail Hedge strategy. Ultra evasive Grail Hedge strategy involves you placing the two trades like you have here at the same point. Okay, for V75 1S, preferably you place pending orders around the 88 mark. I have 12188. I also have 12088. 11988, 181888, 11788, 11688. So you can place pending orders at these levels, psychological levels for Vision 5 and you'll be fine. If I move, we're on 1 hour chart, 1 hour time frame. If I move the chart to 5 minute time frame, these psychological marks acts as support and resistance levels. Okay, support and resistance level. I'm talking about the 12088, 11988, 11888. If you look at the 12088, for instance, you can see price testing that level on the 5 minute time frame. Price tested the level twice before going down. You can see a clean break on 11988. Then you can see some level of consolidation around 11888. So these have been discovered as we continue our research. There's a research work of that took us some months to find out, and you are benefiting from it. I'm talking about the psychological levels for V75 1S. So make sure you subscribe to this channel. Click the like button if you like what you're seeing. Also click the notification button so that when we upload another video, you'll be the first to see the prompts, and then you can benefit from the strategy therein. Also, don't forget to drop comments. Okay, drop comments, ask questions below the video. If you have any question, we'll try as much as possible to respond to your question. You can also visit our website, www.binfxtrader.com, to learn more on this strategy and other good strategies on how to trade forex and volatility index. You can also visit another site of ours, fxfables.com, to learn more on how to trade forex and volatility index. So till I come your way next time, is bye for now.